So we're here with the first place person in week 3 of AFSA Stock Simulator.
Yeah.
So introduce yourself.
Okay, so my name's Andrew. I'm a 4A software engineer. I've worked at TD Securities and in Toronto twice. I did mostly automated strategies and automated market making.
What are some of the strategies that you used or have been using in AFSA Stock Simulator for the past 3 weeks?
So my AFSA stocks portfolio is all completely automated. So it all runs through my proprietary algorithms that I run on my computer every day.
Wait. So you're saying that you made up a CS program to run
Correct.
AFSA Stock Simulator?
So it connects to Investopedia. So what I do is I grab real-time quotes and then I perform analytics on it. And then I send out the orders to Investopedia and then it trades.
What do you mean by analytics? Some type of algorithm?
It's an algorithm. Unfortunately, it's kind of like a black box. Unfortunately,
Top
I can't
secret?
tell you.
You have to kill me if you told me.
Yeah,
Okay.
I'd hunt you down. The mafia would get to you though.
Okay.
I don't want my hands stained red, so and unfortunately I can't because I worked at TD on their algos, so I can't divulge those.
What are some of your favorite stocks that you go to?
Definitely.
Go-to stocks.
My favorite stocks are definitely the triple leveraged ETFs.
Direction.
That direction.
Okay.
Because those have the most volatility during the day, and especially when you're doing algo trading, that's the most important thing you look for. It's because it's completely signal based, right? So, I mean, you want the signals to be you want to be profitable during the signal. So you don't want to have a signal and then you get another signal like a couple minutes later at a price that you don't want to get out at. So triple leverage definitely makes it a lot more interesting to trade an algo.
Has your portfolio been volatile? Has it been going up and then down, or has it been stable and then you experienced this week of exponential growth? How has it been for you?
I'd have to say I try to keep my Sharpe ratio as low as possible. So huge return but very low risk. So the algorithm's sort of trained to do better when it's making money and you're sort of cut back when it's not.
Huge return and very low risk kind of sounds like arbitrage.
Kind of, but it's more like a statistical arbitrage than classical.
And do you invest? You must invest in options to have a.
No, actually, I find that options are
too risky.
Not only they're too risky, but they're not as liquid as stocks, and especially when you're running an algo strategy. You definitely want it to be liquid because you don't. Unfortunately, since Investopedia doesn't really have an API, you kind of need to know for sure that you're getting out of the position, or else the whole algo is running blind, and that's the worst situation.
So pretty much you're only running on long positions and short positions?
Yes, long, short equities.
Wow. All right. Well, thank you very much, Andrew.
Any last words? No?
Any tips?
Any tips? I like to say some good tips are get a game plan and stick to it. Know when to get in and when to get out of a trade. Don't just if you only know one side, then you don't know enough, and you shouldn't go in.
All right. Thank you very much.
Thank you.
Right, no problem.
Backup plan to find you. Start acceleration. Take it back to square one. Gotta